please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. So markets off the low point of the day, but still not looking at the best shape at this point. In fact, had conquered 11,000 in this particular week, and right now that particular figure for Nifty 50 is elusive. Now Sensex Nifty holding on in the green. What's also holding on and going ahead with the momentum and contributing is the Bank Nifty, which is about 0.5% up, but it's the mid caps which had very weak last few sessions of trade and have today perked up and 1.5% up on that. Reliance Industries, ICICI Bank are some of the big contributors, and a big dragger on Nifty 50 is Hindustan Unilever, known for touching new record highs, but then the brokerages have taken off their support from this particular counter, have downgraded it only based on valuation, while the results were still good for it, Sonia.
Yes, in fact, there's a big wave of short covering that you're seeing in the market. It's really evident with what's happening with Federal Bank. I mean, Federal Bank is one stock that was sitting at 52-week low, so there were plenty of shorts piled up there. The numbers, of course, are much better than what the street was estimating. So there's a big wave of short covering that you're seeing in Federal Bank this afternoon. Clearly the stock of the moment. Also, we're just getting more details on the slippages for Federal Bank. The corporate slippages have fallen substantially this time around to 207 crores versus 600 crores earlier, and that has led to overall slippages coming off as well. We'll of course talk about this stock in greater detail, but it just goes to show that there's a wave of short covering that you're seeing in the markets today. But let's talk about the other markets now. Asian markets trade mostly lower as oil prices have been edging higher after an overnight tumble. The European markets have opened mixed. Investors await remarks by the Fed Reserve Chairman Jerome Powell at the semi-annual monetary policy before the Senate today. CNBC Sri Jayagaraja is here with what to expect and if it is likely that the economy will take a hit as a result of the tariffs being implemented. Take a look. All right, those are Ashok Leyland's numbers. The net profits have come in at 370 odd crores. That is largely in line, slightly better than what the street was estimating. 370 crores compares to 346 crores, which was the poll. So that is more than a 3-time bump up. The top line growth also 6250 crores. Remember, 6316 crores was the expectation. So it's not really much less than what the street was estimating. It's largely in line. 6250 crores compares to 4238 crores same time last year. So it's about a 50% bump up that we are seeing in the top line and a 3-time jump in the bottom line. The most important number for Ashok Leyland will be the margin figure. This time around, remember, the absolute volumes. Okay, there you have it. The EBITDA number has come out. It stands at 647 odd crores. I think that's what the street really likes. 647 crores is much better than the street estimates. That's a 10.4% margin number. And that really is higher than the street estimates of 9.6%. Now, see, despite the raw material costs going up, what the management had done in the month of April was they took a price increase of 2%. So they passed on the raw material cost to the customers, part of it at least, and with that they managed to hold on to their EBITDA margins. This 10.4% number compares to 11.8% same last quarter and 11.1% the quarter before. So these are good numbers, and also remember the stock has fallen quite a bit. It had hit a high of 167 in the month of May. It fell quite a bit from there. By the way, tax expenses have gone up quite a bit, so it's actually a big operational beat that Ashok Leyland is seeing at the moment, much better than what the street was estimating. I'm going to quickly calculate the realizations, but while I do that, let me get Prakash Diwan on board as well. I'm also going to just read some comments from the management in the meantime. Vinod Dasari says the total industry volumes registered 84% growth, primarily driven by a surge in infra spending, resulting in higher sales of tipper and MAVs. There was, of course, an impact of the base effect, but going ahead, they are operating in an environment of heavy discounting and a credit push. He adds that despite pressures on realization and raw material price increases, I'm happy that we continue to post growth growth with profitability. Prakash, 5.5% higher on the stock now. It looks like they've been able to pass on the higher raw material prices quite well. They did take a price increase of 2% in the month of April, but this 10.4% margin, how would you read into it, and what's your view on the stock now?
So it's a very impressive, Sonia. Very clearly, I think this 10% plus itself is a zone that people will like, because there were some fears that it could really get impacted because already you had a base effect which was not working in your favor. The other important thing, as I told you in the morning, was Ashok Leyland has probably one of the best product mixes within the peer group. So they will continue to be able to get great EBITDA growth. And then the challenge is now. It's not, April, May, June, probably the challenge was more towards June than April and May. But the challenge will continue, and they'll be able to differentiate themselves only on the basis of the product strength. So I think very good numbers. The stock should probably see some more enthusiasm coming back as clarity on this new order from the government comes on the freight loading and all.
I just have some more numbers I want to, put on board. The net realizations, as I calculated, stand at 14.83 lakh rupees a unit, which is bang in line with street estimates. Yes, it is lower than the 14.9 lakh that they saw last quarter, but this was on expected lines. Remember, the absolute figures, absolute volumes sold were also lower quarter on quarter, so that would translate into margins. But nevertheless, they've managed to hold on to margins despite cost pressures, despite higher discounting, and that says a lot really in this environment. Prakash, 14.83 lakh rupees per unit as the realizations, how would you read into that? And given the fact that the stock has fallen quite a bit from its highs, of around 170, you think at 130 it's still a good buy?
Oh yes. So as I keep on mentioning that for Ashok Leyland, if you were to buy into it on an upswing, then you make more money rather than kind of wait for a bottom, because it doesn't take much time to start, getting that valuation richness coming back. And the realization levels that you're talking, if you see the trend for the last 4 quarters or 6 quarters, it's been fairly consistent in this zone. It's not had these ups and downs which could disturb you, which means that their strategy on creating depth in all the product verticals, whether it's LCVs, whether it's MHCVs, HCVs, all of that is paying off well. And I think the stock will see a lot of interest coming back in this 120, 130 zone.
Okay, all right. The stock will see a lot of interest coming back in this 120 to 130 zone. By the way, the stock is spiking up now, up almost about 5.5% odd. Also, raw material costs as a percentage of sales. I'm just going to try and calculate that. In Q4, it was 71.9% as a percentage of sales. I guess given the way these numbers have shaped up, perhaps it has fallen this time, and I'm not too sure. But in any case, they had passed on the that's the realization figure, 14.83 lakhs. As I mentioned, that's largely in line with what the street was estimating, Nisha.
But you have to take into account also the raw material, and while you calculate that, Prakash, another question. You said that the product mix is good and the valuations look good. What are the expectations of the stock being re-rated from here on, and what are the most important factors that you'll watch out for going forward?
So I'll tell you, this confusion that has been created by this recent order is one of the reasons why we saw the stock coming off a bit yesterday. So it's just moving back or reclaiming its territory today. Now, based on these numbers and the commentary that we are yet to hear, my sense is if everything goes off well in terms of the BS6 convergence next year, and these new changes on load carrying capacities and allowances coincide with that, then you have a sales figure which is going to look dramatically very positive for FY19 onwards. So I think the stock will reclaim that old territory of 155, 160 very quickly, and then probably consolidate in that zone. But I don't see any downward pressure anymore than what we saw in the recent times, the sell-off that we saw. I think that's over and done with.
Okay, so I just calculated the raw material cost as a percentage of sales, Prakash, and they've actually gone down. It's come in at 69.6% as a percentage of sales. This compares to 71.9% last quarter and 71% in the quarter before. So not only have the raw material costs come down, but they've also been able to sort of pass it on, and they've managed to hold on to their realizations at 14.8. So it seems like on most parameters, operational operationally they've done pretty well. Do you think, given the new notifications that have come out with respect to the loading of trucks, etc., will they be able to continue passing on the price and the raw material costs? Because in April they took a price hike of 2%, but do you get a sense that they can continue to do that?
I don't think so. It's not going to be very easy till the truck buyers start understanding what's in it for them in terms of these new notifications, whether they are positive or negative. Once that is established, things could be different, which could take a few months, Sonia. So my sense is the current quarter is where they'll have a slightly higher stress on realization and on margins, because the costs, as I said, have gone up significantly post-June, whereas April, May were much softer. And the price hike was front-ended, so that's been an advantage. But still, you can't take away the fact that EBITDA is 10%, the margins are 10% plus from, I don't know, I think it was 6.8, 7 last time. So things definitely are looking up, and they will be able to compensate what they lose out on price, on margins from volume increase in the LCV segment.
Okay, all right, Prakash. Thanks a lot for joining us. So that's the sum and substance of the Ashok Leyland numbers. Operationally, it's a big beat coming in from Ashok Leyland. The margins have improved to 10% plus versus an expectation of 9.6%. The raw material costs as a percentage of sales have fallen. The realizations are stable at 14.8 lakh rupees a unit. And even if you look at the overall numbers, it's a threefold jump in the profitability and a 50% plus jump in the top line. Of course, you can't compare it year on year because it has a very low base from same time last year, as there was that BS4 transition. But even quarter on quarter, if you compare it, given the kind of raw material cost pressures and high discounting that the street has seen, this is a fairly strong set of numbers. And of course, the stock has the headroom because it's fallen quite a bit from its 52-week highs. But with that, I guess we should move on.
Yes, Sonia. So as you were mentioning about the overall numbers, operationally good, and therefore that stock is getting rewarded. So we'll focus more on.
We should move on.
Yes, Sonia. So as you were mentioning about the overall numbers, operationally good, and therefore that stock is getting rewarded. So we'll focus more on the markets and the news at this point. But it's time for a short breather on Business Lunch. Stay tuned.
Hi, welcome back. You're still watching Business Lunch on CNBC TV18. This market is definitely in the mood to reward good earnings. You've seen it with Federal Bank, you've seen it with Ashok Leyland. Both those stocks are actually the stocks of the day so far. Good numbers coming in from both companies, and of course, those stocks have been coming off their 52-week lows, or rather the lows that they've seen over the past many days. But let's talk about crude prices now. They are at 3-month lows. M.K. Surana, the Chairman and Managing Director of HPCL, says there is positive news flow on the supply of oil from the US sanctions on Iran for India. So let's listen.
There is some positive news which are coming in, and there is multiple, I should say that, which is helping the sentiments in the market being very hawkish. One thing is that how the Iran sanctions get implemented, whether it is total, whether it is partial, whether there are ways out to handle that. That's one. Second thing is that the possibilities of the alternate source of supply in the market, like release of strategic reserves from US, then the Libya ports restarting supplies, Russia and Saudi Arabia making the statements that they can put additional oil in the market. So these are all the positive news which helps the sentiments. My view is that once upon a time, some time back, which we were thinking that probably 80 is the norm and 80 plus is the norm, I would try to see it lower than that now. Lower crude prices definitely helps in terms of the fuel which we burn in our refinery. So to that extent helps the GRMs. So lower crude prices is always beneficial for the refining sector. As far as the marketing sector is concerned, a lower ultimate product price, international product price, gives a better leeway to the oil companies to ensure that we are able to align our domestic prices properly to the international domestic prices. And one of the sentiment which the market has, whether the oil companies will be able to pass on the whole of the price impact or not, those type of fears vanishes when the prices are on the lower side.
All right, so that was HPCL management, and this Muthoot Capital results flashing on your screens, but we have a bigger story to really follow. Federal Bank, take a look at that particular counter, and that is up over 12%, 12.5%. And take a look also at Bank Nifty in the last few minutes of trade, aided by Federal Bank, which is coming in as a big contributor, has also perked up in trade. And this is on the back of the numbers which the street really likes. Abhishek Kothari is right here to tell us exactly why is the market rewarding Federal Bank. Abhishek.
Well, Nisha, to begin with, slippages is the key highlight of this result. Nothing else works out. So slippages have declined to 460 crore. That compares to about 872 crore in the previous quarter. What led to the sharp decline in the slippages? The corporate slippages came in at 207 crore. That compares to about 604 crore in the previous quarter. So the corporate slippages have declined by 66% sequentially. So that saw a sharp improvement in their overall net earnings. So the profit actually came at 265 crore versus our pool of 220 crore. Apart from slippages and profits, you look at the restructured book. The restructured book has declined to 1,144 crores, and that is a decline of 17.5% on a sequential basis. So the stress in the balance sheet is reducing. The restructured book as a percentage of the overall loan book is at 1.2% when compared to 1.5% in the previous quarter. Going into the results, the stock was at 52-week low, so valuations aiding in the stock gain today.
All right, thanks a lot for that. That clearly is the stock of the moment, up 13% now. Let's take a short break on that note. But coming up next, the global professional networking platform LinkedIn has crossed 50 million users in India. We'll get you an excerpt of an exclusive chat with their India head when we return.
Welcome back. On to the latest coming in on the LIC IDBI Bank stake sale, and the LIC board has already approved acquiring majority stake in IDBI Bank, and today the IDBI Bank board will be meeting to approve the 51% acquisition by LIC. My colleague Ritu Singh is here with all the details on what's expected from the board meet today. Tell us, Ritu.
The board of IDBI Bank will be meeting at 3 p.m. today to approve the acquisition of 51% stake in the bank by Life Insurance Corporation. Remember, LIC is already a shareholder of the bank and owns about 7.98% stake, and it will acquire an additional 43% to take its shareholding to close to 51% stake in the bank, becoming the majority shareholder. Government's shareholding, which is currently at about 85%, will come down to below 50% post the closure of this deal. So also on the agenda is the approval of nominee directors. Remember, the DEA secretary yesterday said that about 4 nominee directors from LIC will be appointed to the IDBI Bank board. That is also something that should be finalized in today's meeting. The other thing would be the turnaround plan itself for IDBI Bank, which has a gross bad loan of almost 30%, one of the highest NPAs in the industry. So all of these will be on the agenda. It is important to get the bank board's nod, but even after that, there will be regulatory approvals required from both SEBI and RBI that will be pending to close, what is one of the largest banking deals in recent times.
All right, well, thanks, Ritu, for that. But even as the FMCG major ITC prepares to make a mega foray into the 1,500 crore frozen and processed vegetable space over the next couple of months, Baba Ramdev's Patanjali Ayurved has already set the ball rolling and are not too far behind. It is planning to roll out a range of frozen vegetables to reach 10,000 retail outlets across India by 2019. Priya joins in now. Priya, the space is definitely hotting up.
Absolutely. In fact, what we do understand from our sources is that Baba Ramdev's Patanjali Ayurved is planning a large-scale launch as far as frozen vegetables are concerned. Now, at present, Patanjali does offer peas on a pilot basis, and this is available in 4 markets, including Delhi, Maharashtra, Rajasthan, as well as Haryana. But what we do understand from our sources is that Patanjali is looking at expanding this to about 6 to 7 new vegetables, including the likes of carrot, cauliflower, cabbage, as well as corn, is what we do understand. Now, these frozen variants will be available on a pan-India basis in the second phase of its launch, which we do understand will happen in 2019. But the formal launch of frozen vegetables will take place over the next 4 to 6 months. Now, in terms of the timeline, Patanjali is looking at reaching about 10,000 retail outlets by 2019 is what we do understand from our sources. Now, why is this important at this point in time? Is because ITC is also looking at launching frozen vegetables soon. So clearly, it looks like the space is heating up. We did reach out to Patanjali, and the company has confirmed plans of a pan-India launch of frozen vegetables by 2019.
All right. Thanks so much, Priya, for getting us all those important details. Steel Minister is saying that they don't see any signs of steel import surge due to US tariff barriers. This has been a big concern for the metal industry in India. So keep an eye out on that one. Moving on then, global professional networking platform LinkedIn has crossed 50 million users base in India. Now, the company also plans to support the Indian regional languages on the platform in the coming days. My colleague Rukmini Rao caught up exclusively with the India head to find out more about this. Take a look, and we will be back with Midcap Radar on the other side.
Very excited to talk about India being the first market outside the US, hitting 50 million users in the market. We have doubled our user base just in the last 4 years. We're now adding about 1 million users every 6 weeks or so. And I think a lot of this growth that we're seeing in India is coming from the tier 2, tier 3 cities. We've invested a lot in LinkedIn to make our platform better for folks from all around the country, even the villages where maybe the connectivity is not so great. We've invested in products like LinkedIn Lite. A lot of that investment that we've made in India is now yielding results for us. So we're actually seeing re-accelerated growth, both from a member standpoint as well as from a revenue standpoint.
Of course, I think in the last, Microsoft results, we heard revenues of LinkedIn was up by north of 35% or so. What has been the revenue growth for LinkedIn in India?
So in India is among the fastest growing markets for us in Asia Pacific, and actually our growth rates, again, as I said, is accelerated in the last year. A lot of that growth is coming from our talent solutions business. That's actually our biggest business in India. A lot more companies are wanting to use that platform to recruit and also to learn. And then the other business that is the consumer business, the subscription business, is actually in India is the fastest growing business for us. It's growing a lot because a lot of students are now part of the platform. They are actually buying premium subscriptions to help get their first job, to help with resume building, and a lot of services that we provide on the subscription package. So I think like those two businesses are driving a lot of that growth for India.
Would you be looking at the vernacular space to perhaps take LinkedIn to the next level? Because India, so many languages. In terms of adoption of LinkedIn in vernacular language is something being worked on.
It's something that we continuously kind of discuss internally because for knowledge workers, kind of the current product English works really well. But as we go to more of the blue-collar economy in India, you go to more kind of the tier 2, tier 3 cities, increasingly we're hearing feedback about wanting to be in other languages. And so that's something we're strongly considering now.